Good morning, everybody, and welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. So last week, what a rally in the markets. The question is, will it continue? As of now, it is. We are seeing S&P futures up. We're going to take a look at that in just 1 second. We're going to go over all the technical levels we have to be aware of, where the target levels could be, what the heck is going on with Tesla, Bitcoin, you name it. Even gold is in action today. So there's a lot to cover. The first thing I want to mention, the bond market is closed. And as I've said for 25 years, when the cat's away, the mice will play. The bond market is major big money, even over the stock market, and therefore when the bond market's closed, it means more retail will have control of the stock market. The chances are we do have an up day on the back of that. How much of an up day, we don't know, but again, markets are up and the retail crowd will be much more in control today versus institutional money. All right, let's go over to the big board here and take a look at what the markets are doing. You can see this is the pre-market data. So this was after hours on Friday right down here. The markets, again, 4 in the morning right here, 4 a.m. Eastern time. We opened up, we kind of ground higher, and then you have seen a little bit of a dip right here, but this is still net positive, all right? And when we look at this, we see the market's closed right here on Friday. We are trading up here around 600. So you're looking at basically a $2 gain on the SPY or 20 points on the S&P 500 with the stock market about to open in about 27 minutes. All right. Now, a couple things we have to go over. So we're looking at an up market, at least initially today. Again, bond market is closed, like I said. This is a key trend line. So remember this trend line down here on the charts. We talked about this last week in the game plan. You connect these lows. It connects right through that high right there, and that's essentially where we closed on Friday. Now, the question is, do we push up a little bit higher? Now, if you've been paying attention for the last month or so, I talked about a target price on the S&P between 6,000, right, and 6,100. All right, so now as of Friday, we pierced 6,000 on the S&P. We closed just below at 59.95, and pre-market we're back above 6,000. Now keep in mind, we could go up a little bit higher, but as I said before, once we're in this range, I'm going to be looking to take a large put position on the S&P 500. And ultimately, it's a little too much too fast, and also I think that a lot of this is ignoring that you have overall cycle patterns and you have a labor market that's slowing down. And notice again how the Fed has cut rates again as of last week. Interest rates still remain high because there's this over or underlying concern that the money printing is not going to stop, all right? Again, no matter who's in the White House, and I said this before, no matter the promises made, I have a hard time believing that any politician's going to be willing to cut spending dramatically. We'll watch and see. Hopefully I'm wrong. I would love nothing more than to see our deficits come down versus just spiraling to the upside. Okay, so that's the S&P. Again, we could go a little bit higher, but we're getting to the end of the road. Tesla today, a monster move, guys. Take a look at the chart on Tesla. We are trading up another 6 to 7% pre-market. When I see this type of thing, folks, I start salivating. Now, what do I mean by that? Well, when stocks get this crazy in terms of vertical moves, and we're talking about a $1 trillion company now. As of this morning, before the upside in the pre-market, it's a $1.03 trillion company. Now, again, it'll be about 1.1, give or take, right, as of the open if we stay here. This type of market cap expansion will have a retrace. Even if it down the line it goes higher, and it might, you're still going to get a retrace. So what I like to do is I like to look for opportunities. One opportunity on this chart, I was looking back and I'm like, well, listen, we're not near the all-time highs just yet. That's still around 400 or just above. But is there a Fibonacci retrace? And so what I did is I took the all-time high on Tesla to the low here from 2023 in January, which was at about $105. And what's fascinating is that we can see there's a Fibonacci 786 level right here at 347 to 350. And so for me, at least as a starter kind of zone for a day trade, this is where I'm going to look to probably start shorting Tesla during hours today. And again, ultimately, my guess is we'll have some sort of retrace. Now, if we go back to the charts, you might say, okay, well, if you look for a retrace, so let's say we get in at 347 or 350 today as a day trade, what kind of pullback could you expect? Well, what you do is you look for previous pivot points. And one of the levels I see right here is this 315 level. So in terms of a day trade, 313 right there, if we're going to open up here, let's say we open at 348 up here, you look for a pullback to that level, which is just below gap fill actually. Gap fill would be a fine level on a retrace as well. And again, I always want to stress to people is that, especially dealing with Elon Musk, and this has nothing to do with my like or hate for Tesla, has nothing to do with my love or hate for Elon Musk. I honestly couldn't care less in terms of the individual or the company. A good trader looks at the chart, doesn't let emotion cloud their judgment, the love or the hate side. When you get in these political kind of crazinesses, people make emotional decisions. And again, traders, if you want to be successful long term, you have to avoid that and focus on probability. That's what we always talk about. All right, next up, Bristol Myers, big move here pre-market. I think they had some drug news. I was kind of looking into it. I know they were presenting at something here. But again, big move up of about 13% here. And if we look at this, the question is, well, where could this be headed? And I do have a level up here at around, looks like I'm looking at a level here at around 63 and change. So 63.15. Let me go back to the pre-market. Yep, so it's trading around just above 61. The technical, and you can see right here, right? So we have this pivot low right here, and then right here and right here. That's telling me there's a technical level here at around 63.15 to 63.25. That might be a shortable level on an intraday basis for us as traders. All right, NVIDIA here. This is more of a big-time view, and I'll go over to the big board to look at it here. So we have NVIDIA, and NVIDIA continues to be in the upper ranges. I think it's flat to positive this morning. But one of the research factors I was doing here, I was looking at the high from 2021, which, by the way, this was a bull market high in the NASDAQ. Right? This was the bull market high from 2021. NVIDIA was only post-split around a $40 company at that point. The idea is you take that high right here, you connect it to your high before the August collapse where it went from 140 back to 90. You take that high and you extend it out, and there's a very key hit of a trend line at around 158 on NVIDIA. And the idea being is that that could be an upside target that we look at as a high probability opportunity for downside to follow. And one of the things we can see is that when you made this high, you had a protracted or a longer bearish market here. And then even here, it wasn't a very long period of time, but you still dropped. It still dropped about 50% in terms of price before it reclaimed and moved up. And so extrapolating that out as good traders do, you say, okay, well, maybe you don't get 50%, but is it possible to get a 25% correction? And the answer is very much yes, it is. So keep an eye on that on NVIDIA here. All right, so I do want to get into crypto because crypto was the superstar of the weekend. There's no doubt about it. Incredible moves, not only in Bitcoin, but Ethereum and altcoins across the board. And when we go to Bitcoin here, I have to show you this. So you guys know that we talked about maybe upside to 120,000. That's kind of the most bull case that I can come up with, which would be a major trend line. But I did find this, and let's go over to the big board here. So one of the things I saw is if you take the bear market low here in 2020, this was, by the way, this was the COVID drop right here. I think we went down to, what was it, about 10,000 or a little bit below 10,000 at that point. And you draw a line here and you stretch it out, and then you drag a parallel up. You come up here, here, and then look at where we currently are. So this is for those of us watching that are either rooting for or against, doesn't really matter to me. The point is this is a level to watch. Can Bitcoin get through this 82 to 83,000 level, right? I think currently we're around 81 and change. Can it break through? If it breaks through here, I got to think that you're headed towards that 100 even number, right? At least the 100 even number, maybe the 120 we talked about. But ultimately, if it gets rejected here, where would you expect a pullback to come in? You'd expect a pullback back to these former highs, right? Essentially a retrace to the scene of the crime. 73, 74,000 would be your pullback. And by the way, that would actually be healthy. In a weird way, you want charts that backtest because it builds strength when it backtests. Think about, if you build a vertical tower just straight up, a wind comes and blows it over. If you build a block tower, right, and you have checkbacks along the way, it can be much, much more sturdy. And that's what checkbacks in charts are. It's actually not healthy for things to go vertical because then you get the major pullbacks that wipe so many people out. So again, 82 to 83,000 right there. That is a major level on Bitcoin to watch. We're going to see what happens today, tomorrow, and the rest of this week. Now, gold. Gold is getting annihilated today. Part of the issue with gold here, guys, is if we go to the dollar chart, let's take a look here. The dollar is also stronger again today. Now, the dollar is still into major resistance. We can still see a trend line going back to 2021 here. So there should be a lot of resistance that pushes the dollar back down. But I have talked to you guys about being short gold, and I did take half off the table on this dip last week with my second target down at this lower parallel band here. So we're looking at around 25.50 or so as your downside target. But what a drop on gold here, folks. Gold again was near 2,800. It's now at 26 and a quarter-ish, and ultimately probably should have another $75 of downside before it tags the low end. Once it gets down there, I think you start looking to buy the GDX, you buy other miners, and you can also buy gold overall, at least nibble. And again, just be careful because gold has had a long period of upside move. I've talked about how people have gotten complacent on gold, how even, the John Q. Publics are very, very bullish, which is usually the sign of a pullback correction coming when you have everyone out there bullish. It could always go lower than 2550 to 2500, but again, that's your starting point based on technical analysis. Now, if we go to a couple other charts here, let's look at silver. Silver earlier this morning was holding up, but now it is breaking down, and this is the key here, folks. In fact, let me go over to the big board again. We'll take a look at this here. Okay, so you guys know, we talked, when we were up here, I talked about saying, all right, I still expect it to pull back here. And a lot of people asked me, said, well, would you buy it at 32.50? And I said, no, you can't buy it at 32.50 because it's still too extended and there's too many ancillary risks there. And sure enough, what happened, it comes down to 32.50. We see the support doing its thing, but like the analysis and probabilities told me, stay back on it. We came lower, then we bounced off this trend line right here, right? And now we're breaking lower. And I've talked to you guys about the 29 level for quite some time. It's right in this zone. You can see it's actually a wedge pattern that you broke out of. And what is that called? When you retrace to it, it's called retrace to the scene of the crime. And so the idea is you broke out of this wedge pattern here, and it goes all the way down here and up here, and then we broke out here. This was your breakout. You went up, and now the idea is you come back here, and I think that, to me, is where I start nibbling on some silver per technical analysis, all right? And again, remember, it's all about probabilities. Everything we do is probability-based here at Verified Investing. It kind of cleans it up from all the hype and all the nonsense. And again, in this day and age, the more you're on social media, the more people get emotional. And emotion does not help with making logical, fact-based decisions. And that's where the charts can come in and really balance out. If someone's on social media, and listen, I know a lot of you guys maybe don't go on social media as much, but I think, again, be very aware that there's always a narrative being spun. There's always hype. There's fear and greed, right? Fear and greed sells advertisements on the legacy media, the mainstream media, right? It also gets people, when these players that are running social media, whether it's Facebook or X or anything else, when they can spread that fear, what does it do? It makes people come back and want to consume. They need to know what's going on, and that creates an emotional response within us all. And so, again, you have to be very aware that that's going on. And by the way, it all comes down to dollars and cents. I don't care if it's X or Facebook or any of these others. Remember, it all comes down to money. It's the end game. Social media is just one more media outlet that is trying to get you to be either scared or greedy, and to be always coming back, because then they can make more money from advertisers. It's just it's the nature of it, folks. It is what it is. All right, let's go to oil today. Oil had that 1 week bounce or so that was kind of shallow. Look, in 2 days, we're already wiping out over 50% of that upside. Remember what I talked about last week, guys. If we zoom out on this chart, if we break 65, oil is destined for $35 a barrel. Like I said to you guys before, is that all of us would love that because our cars, filling up our cars and heating our homes and stuff, it would be very inexpensive. But you have to look at the opposite side, which is, okay, well, what does it tell us about the economy? Where's the economy at that point? And that's the other trigger. I mean, it's one thing to say $50 barrel oil. Okay, the economy could still be hanging in there, especially if we're drilling more and so forth. But if you get down to $35 a barrel, there's something going on there in the economy, probably a recession. Lastly, let's take a look at natural gas. You guys know I've been on the sidelines of natural gas for a while here after we had a couple good trades. Nat gas is just pushing back up. Good move today. Great move, about an 8.7% move. But the question is, does it get up to resistance at around $3.20 here? That will be the key level to watch. All right, guys, lots to figure out this week. This week we have CPI, PPI data, so inflation data. We have some economic data. We'll be getting some more earnings, although the big players are out of the way at this point. We're going to hear more as the Trump administration starts to form its core, what's going on there. Lots of things the market will be hinging on. But again, watch yields, the U.S. dollar. Bitcoin should be really interesting, and also keep an eye on Tesla stock. I think Tesla stock's got some opportunity for us as traders. You guys have a great rest of your day. Thanks for tuning into the game plan here at VerifiedInvesting.com. I got to get trading. Take care.